Hi, I am Vicki Wright Hamilton, and welcome to Ignite. Are you ready to spark your passion and fuel your leadership journey? Then this is where ambition meets action and transformation begins. Let's light the fire and keep it burning. I will tell you, I am so excited to have my guest today, Kendra McDowell. We're going to be talking about some things that are happening right now, all around this tax season. Hi, Kendra.
Hi. Thank you for
Welcome.
having me. Yes, yes.
Well, why don't you take a minute and just tell the audience about your company and what you do?
Yeah, so my name is Kendra McDowell. I coined myself as a born accountant. I own Premier Accounting Associates, which is a bookkeeping and tax firm. I have a home care agency and I do podcasts and I'm working on my first documentary series. So, yeah, boring stuff. But my
No, exciting stuff. I can relate to the documentary. I got one releasing on March 20th, The Diary of Successful Black Women here in Atlanta. And so we'll be at the theater and doing our premiere. And so I can relate to all of that. I also sell products. So, girlfriend, you are in good company in terms of moving forward. But
I
as we talk about that, we are in tax season. And
mhm.
it's a very, very stressful time, as we begin to look at taxes. I'd like to ask you, what are the steps that business owners can take throughout the year to prepare for their tax season so it's not so stressful?
Right. So I always tell my clients that you need to keep up with your receipts. You need to make sure that you are bookkeeping. That's like the scariest word that a lot of clients don't do. And so what they do is every month they put everything in a shoebox. And yeah, there are still some clients that, and we're not talking about small companies, but they're just, I don't know if they do that just to be quirky. But my advice to business owners is that, you have to get a handle and know where you are. And so in order to do that, it's best practice to make sure that you're tracking your income, you're tracking your expenses daily so you can have a handle on your cash flow and making sure that if you don't have an accountant or bookkeeper, that you are reconciling that to your bank statement. A lot of businesses like to look at their cash balance to say, oh, this is where I am. But your bank balance is not where your cash position is. So I can't speak that enough to say keeping track of your income and expenses. And that also lets you know what you have left to pay and then what you're owed. So it's a great practice.
I really appreciate that advice, even as a single business owner, taking files to categorize during the year. Okay, this is a receipt I need to keep for this. This is a receipt I need to keep for this. Or here's my monthly statement, or this is where I am, or was my financial review with doing my with my QuickBooks and making sure, it's all those little things, but it's the things we don't like to do, but we have to do, right? And I think that's one of the benefits of your company is that if you don't want to do it, you don't have to worry about it. Hire me, I can get it done.
The tax hero.
I see you. I see you. I see you. So let me ask you, how can someone maximize the deductions without the fear of making a mistake? That I'm doing the wrong thing or I didn't do it correctly, etc.
Right. So, in order to maximize your deduction, you want to make sure that you have evidence, evidence. I can't say that enough. So, you have to make sure that it's an expense that is insured, an expense that should be written off. And then you have to have the receipt and then you have to have the reason. A lot of individuals be like, oh, I had, my house redone and, I have a home based business. Can I use that as an expense? So I think it's also being knowledgeable of what are eligible expenses so that you are maximizing the correct expenses. Because just because whether you have a business or a home based business, not everything can get thrown in there as an expense. And I think that's where I see sometimes the knowledge basis is just you can maximize, but you have to document. You have to make sure that it's in the correct category and that it is insured deduction that is yours to take. And if that is true and you have the expenses to back it out, maximize it.
So I want to take that a little further.
Okay.
First of all, where can a business owner go to get of what's available to be, for expenses. And does that matter based upon the kind of company you are, whether you're a LLC, a nonprofit, etc.? Where do we go to get that so that we know?
Right. So I would suggest the best place to go is going to be to the irs.gov because you can print this form. So going back to your question, a Schedule C or an LLC. So for tax purposes, they are treated just like sole proprietors. So they will do theirs with their personal income tax and it'll be on the Schedule C. And if you go into the IRS website, it's going to give you instructions, but it's also going to give you detail of the different line items. And then you can also cross check that. If you are an S corporation or C corp, you're going to be filing on 1120 or 1120S. And then from there, all your expenses are going to be reported, and then the difference will be delivered to you as a K1. And then that K1 will be submitted with your tax return.
Okay. So if I go to the website
Mhm.
and I pull down, it will tell me all the eligible expenses for my S Corp or C Corp or whatever. It'll list those out so that I know, okay, if I have a house and I have a home business and my office takes up 300 square feet and my rent is X and I have a total of 4,000 square feet, that's what percentage. So a percentage of what my rent is or my mortgage is that I could write off, those kinds of things.
Right,
Where do I get those kinds of specifics?
right, and this is what a lot of people don't realize is that when you are looking at those forms, the IRS produces instructions for those forms, and the instructions are based on the line items. So, first of all, I would say check in with your accountant because we want you to do what you're good at and run that business and give us more green so we want to grow with you. But if you must, if you must go down the rabbit hole, and the most safe and secure place to get a resource, and we have resources on our website too. But I would always say go to the instruction of the tax form, and the IRS provides not only the instruction on how to fill out the tax form, but on the different numbers, it gives you detailed information about that as well. Now, of course, they're not going to tell you about maximizing, and that's when you need to sit down and speak with a professional on this.
Okay, let's break that down a little bit. When you say maximizing, what does that really mean? Maximizing what and how?
Right. So you want to maximize your deductions. So, like, say for instance, if I'm doing, let's pick a, industry, medical transportation, right? I have a lot of vehicles. Maybe the S corporation setup isn't going to be the greatest for me because I'm not able to deduct the mileage. So again, the question goes back to if I started out as an LLC, but maybe I want to save 10,000. So sometimes people would do the election, right? But there are different deductions and different entities that are treated different ways. If I have a partnership, right, and we want to maximize the expenses there. So when I think of maximizing deductions, how I see that is just making sure if I do have a transportation company, that I'm making sure that I'm have everything at a limit. You know, your 401k at a limit, the max that you can deduct here is maximizing those different categories. And it's going to look different based on the different entity. So someone that has a daycare is going to look a lot different for them than someone that has a transportation to someone who's driving a truck. So taxes sometimes, although we report on the same form, is not a one shoes fits all.
Oh, thank you. I think that's important for people to understand, and I think that also indicates the importance of understanding what kind of entity should I get in the first place, and being able to say, well, what's my end goal? What do I want to do? Am I looking to, you know, do generational wealth and leave it, and I'm going to sell it, and those kinds of things, and I want to be able to deduct these kinds of expenses versus those kind of expenses. So I appreciate that because it really helps the audience understand that it's important that we delineate those.
Right.
So, as we're talking about this, we all know, and I know what I'm good at. I know what I'm not good at when it comes to details. And there's a lot of people that are like, I have anxiety. What advice do you have for those dealing with tax related anxiety all of the time? What should they do?
Yeah. So before I jump into that, I did want to say this one thing that I failed to mention when we're talking about maximizing deductions If in fact you're going to be buying property or doing something, maybe maximizing may not be the thing for you because you need to show income. So I wanted to go back and make sure that we had mentioned that to those, like you said, want to, have a different. So it depends on what your end goal is. But
Okay.
getting back, how to make it less stressful. So in order to make it less stressful, what I see a lot is embarrassment, right? Individuals are embarrassed of how they did their records. They're dealing with so many issues and problems. So I just said, just breathe, be in the moment. You're doing the best that you can do. You're doing a lot better than a lot of people are at this current time. You took a brave step to start your own business and go on your own. And now not only are you supporting your household, you're supporting employees and their families. And that's to be celebrated and cheered on. I think just making sure that you have a strategy in place, making sure that you have your receipts organized, categorized, because if you're organized, then you're not going to have that anxiety when you show up. And if you do show up that way, just hey, come as you are. At our practice, we're like come as you are. We're the premier family, and I like individuals like there's nothing you sometimes people think they're the only one going through this. That's the anxiety, like, oh my God, I'm making money, or this wasn't this year, or my partnership is falling apart. But it's okay.
Well, I appreciate that. And I think the other thing is when you're going to look for that CPA or accountant, that's the most personal thing you have. And our ability to connect is so important. We're going to take a station break and we'll be right back because I want to continue with this great conversation. We'll be right back. Welcome back. And for those of you who are just now joining, let me tell you, Kendra gave some great information about taxes during this time of tax season and getting stressed out and really trying to understand how do we move forward and the importance of your businesses, etc. So if you missed it, I encourage you to go back and listen to it. But Kendra, as we talk about that and we move forward, I want to be able to step up a little bit. A lot of times as a business, we want to scale, we want to get bigger. So, right, a person may start as a solopreneur, then, there's one or two people that they're subcontracting with, but now they really want to scale their business. What are the key financial considerations when scaling a business that you should look at?
Slow and steady wins the race. No, seriously. I literally have that situation going on right now with two clients, right? So slow and steady wins the race. There's no rush. First of all, you have to make sure that you have financial stability. And what I mean by financial stability, make sure that your business is financially secure. If you're paying payroll, make sure that you have enough, like you do with your personal finances. You want to make sure that you have up to 6 months in business income as well, in case something goes haywire with the next steps. So when you think of scaling your business, there's many other options. That could be going out seeking funding. It could be adding partnerships. It could be just transitioning into a different stage. But in scaling your business, you want to make sure that you have the backing to handle that,
Mhm.
right? Because it's going to be more employees, more individuals that you have to be accountable for without losing the customer service and the feel of your product or service.
I think what you just said is the key. We can't lose the value add we've already given because our customers have come to know it. So if we scale so much that we're not able to do that extra, white glove service and to give, customers are like, wait a minute, I should move on. I should go somewhere else, right? Because they've been spoiled. It's kind of like you spoil somebody, you spoil a child, they come back and they want some more. Our customers are the same way. They become to expect that. as we continue to move forward. And I think you would agree that when you're talking about scaling a business and you're looking at your workflow from end to end, you may have to scale a piece at a time of that workflow and not everything at once. So
Mm.
you can take small bites, right? I'm going to do a partnership over this piece, but that's it. I'm going to stop. I'm going to do something over here with this piece, but gradually do it. I like how you said slow is great,
Yeah.
steady pace, but slow. We're thinking about that. How do you balance investing in your growth that you want to do and maintaining your financial stability?
Wow, that's a huge one. Well, when like you also have to take in consideration the time, and I'll give you a short, quick example. During the pandemic, I wrote a little book with my daughter. And actually, it started from me explaining to her what was going on in the world. I had to put a pause on it, not because it wasn't a great book. Everyone just didn't like the pandemic. They didn't want to hear about it. So that would have been an example of something that would flop. So I say that to say that even when you're scaling your business, you have to be aware of what's going on everywhere. You have to kind of play every angle. I had a client, we were looking over software and they wanted to charge all these different fees. And I said, did you look at the economy? Disposable income. So, getting back to your question, I think when a business owner is ready to scale and they don't want to trip, they have to do it in stages and they have to do it in tests. Like you said, move a proportion. Well, maybe I'm going to try it here. I always say you have to have that safety net. And if you're unable to have that safety net, then that's when you have to get a line of credit or, but you have to have that. And most importantly, payroll. You have to make sure that you're covering. No, seriously, because I see a lot of business, that have dissolved. The partners get, a little selfish and they forget about the individuals that help along the way. And, I say the universe rewards you well when you treat people well.
Agreed. That is so true. Karma is something, right? But
That's
I want to expand on something you said because when we think about investing in growth, and then you talked about thinking about what's around you. Okay, so the economy may be changing.
Mhm.
How is the perception in your mind of a business for value when you are discounting or you're charging lower fees because of the market versus what the value is that you're truly bringing to uplift or to help someone solve their pain? Because we're in business to solve pains. That's
That's
what
right.
we do.
Yeah.
Somebody has a pain, somebody doesn't want to do it. That's what we're there to solve. So, how do you balance that from your perspective, so that as you're advising your clients for
Right.
growth, that we're not telling them, yes, the market doesn't have any money and lower your prices to $1 versus keeping your prices where they are, but diversifying your expectations. I'd love to get your thoughts.
Yeah, so with this specific client, what I had said was, I don't think that you should change your price structure, but you should offer a discount, right? Because if disposable income changes, then you have to really think of the mind of their consumer. And if your product is not a necessity, going back to Maslow, rule of order, then you have to be creative in how you discount it, but not lowering your price. So you would say 2025 year discount, and it's a discount to get individuals in, and then it's the wording. I think that when we think of the economy, it's not, I didn't mean it to like say, oh no, no, don't, because risk is what is going to grasp, and it's changing your brand. Even with
Mhm.
the uh-ohs, when we first came out, it was about the pandemic, and then I said, wow, we bring the joys to the messiness of life. So you can rebrand, and restructure. So it's okay, but you have to be cognitive of everything around you.
Agreed.
Yeah.
Agreed. And I love the fact that, and that's why I asked the question because I wanted to bring more of that out because I truly believe that that is the case as we begin to think about it. I also think, I'll tell you, I have a personal thing. I don't ever call a discount because I'm not discounting my value. I always say I'm doing an investment, right? So if it's a 25%, that I'm going to, reduce that price, I always say in 2025, I got 25% investment in you. And what was a $500 value is now, a $425 value or whatever. Because I think that, to your point, wording matters.
Mhm.
And if we start thinking about devaluing, a discount says, oh, I'm getting it for cheap. But guess what? My value is not cheap. So my value not being cheap means that I need to use language that says, wait a minute, I understand the economy is this way, and I'm going to do more investment in you, but that does not discredit the value that I have and what I would, charge. So being able to say it's the value of this is $1,000, put an X through it, but my investment for you is X,
Wow.
right? So
I love
that you can be able to do it. So I just wanted to drop that because that's something that, as a business coach, when I do it, that I'm really cognizant, and I want listeners to know words matter, how you market matters, and to your point, when you get ready to rebrand, how you speak to your customers matter. So
Oh, I love that.
absolutely.
Oh my God. Oh my goodness. I love that.
Absolutely. So
Yeah.
let me ask you this. What strategies have you seen work for businesses that are really wanting to expand without overextending themselves? So how would you guide a company out there on their strategies to use?
Right. First, I always ask, why are you here? The reason you're here, why are you doing this? If it's to make money, that's not what you're going to do. You're going to earn money. you know, but I think that if you're here to solve a problem, if you're here to make the lives of individuals better, then you're going to be able to withstand. I think that, having a business plan, going by that plan, having your financials, projecting those financials, looking at different scenarios. I think that if you're taking your brand from A and you're like, you know what, I want to introduce, say, a new product, or I want to introduce a new service, you have to be able to have the foundation, or the backing, in case A, it doesn't grow as much, B, it does grow, or C, it totally flops. So I think you have to have that strategy. And what does that strategy look like? Having a business plan, running the financials, scenarios. I can't say that enough. Running the scenarios. That's why you want to get you that boring accountant that's listening to classical music. So they can help you. And I don't got nothing better else to do than to run scenarios for you. Like, seriously.
Okay, so can I dial your number and get you to do my scenarios? You bring up such an important point as we begin to talk about, doing this with scenarios because, you think that, okay, I'm going to be really, really optimistic. I'm going to sell this amount. I'm going to do this and I'm going to make all this money. And
Mhm,
then I'm going to go and do this. And you're so excited about what you're doing that you're hyped. And
mhm.
then somebody comes in and busts your bubble and says, "But what if that doesn't happen? What are you talking about? It's going to happen. I've already manifested. I already said that's what I'm going to do. What do you mean it's not going to happen? Of course it's going to happen." So I think that you're bringing up a great point in terms of looking at risk,
Mhm,
looking at what you can do, looking at if this occurs, what's my plan?
mhm,
It's kind of like I tell, even with some of my leadership clients that I talk to, that I'm coaching, is that you have to always plan. What if I lose my job? What is my plan? I remember when I was no longer working, I said, I'm a teach. I'm going to consult and I'm going to get on paid boards. That was my strategy. When I wasn't working, what did I do? I went to teach. I did projects because it's so important to have that alternative plan. Kendra, I have thoroughly enjoyed this. Thank you so much for
You.
joining us on Ignite today. This has been a phenomenal conversation.
Absolutely. Thanks for having me.
No problem. Okay, we're going to be right back. And when we come back, we have another guest to share with you. And I think you're going to be just as excited. See you in just a moment.